Good day, traders. The 4-step method to high performance trading is a free course download for increasing your competence and your ability to execute your trading edge in live time. The link for the download is in the description box below. And the free audio program, the 7-step daily routine for high performance traders, is also a free download to develop your discipline, your confidence, and a winning mindset to master the markets. Again, the download for these links is in the description box. They're both free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're going to be talking about closing price levels, and a quote that I keep repeating from Paul Tudor Jones and Market Wizards: always think of your entry point as last night's closing price. Now, I've talked about timings, levels, behavior of price. Now, specifically 9:30 New York equity markets open. And unless we have major red news after that time, I consider that to be the open of the market itself. Now, if we have news at 9:45 a.m. or 10 a.m., then obviously I don't consider the market fully open until that news is released. Now, it doesn't matter to me if other people agree, disagree. This is how I approach the markets. And these levels, closing price level and the daily levels, high of day, low of day. Now, I want to just clarify some things about that. Some traders say, well, I just use longer time frames. I do whatever the daily chart's doing or the 4-hour chart's doing. You need to understand that when these levels are broken, this incorporates all time frames. That tells us whether or not, if we're in 3 days of rise, three days of higher closes, 3 days of drop, 3 days of lower closes, breakout traders. Those are all other time frame traders. Daily levels and closing price levels. These are the levels that I look for the trades to take place from. They will act as either potential major support for a continuation trade long at the timing window, so they could dump it down at 9:30 into that closing price level, or it could be major resistance. They could pump it up into that for the pump and dump trade, or they may hold it up there on a day 3 at the high of the week, trap volume before breaking down and dropping on a day 3 high of week to low of day, low of week opportunity. And sometimes on a day 3 closing price may be at 50% of the range, which, depending on how the market behaves when it opens, the high and low of the day may be the significant areas on that day itself. We can look at areas where those boxes form as potential areas for measured movements. We'll be going and looking at that today. Powerful, powerful, important to understand last night's closing price. Now, I want to just say something about this. Now, some people have said, oh, midnight is the close and everything else. Whatever you use, if it works for you, that's great. You're going to see on these charts, I use New York closing charts, and the price at 5 p.m. New York is my closing price. And if midnight's the closing price, they sure like to respect 5 p.m. New York as the closing price level. I just want to remind people, one of the quotes I love sharing as well is that Bill Lipschutz, the Sultan of Currency from Hathersage Capital, he says all the time, if most traders would learn to sit on their hands 50% of the time, they would make a lot more money. And this is applicable to the 3-day method, the best playbook trade setups, because often traders are, they got indicators all over their charts. They get caught chasing price inside. And lo and behold, when it gets to the levels, it automatically, or in a large percentage of time, reverses or goes against what their thesis was in a pump and dump or a dump and pump template, or it goes parabolic if it's a 3-day setup. And so I emphasize these levels because that's what allows me to sit, watch the clock, and watch price. And when it gets there, how does it behave? And these levels are the only 3 areas I am looking to take trades from. Now, there are going to be things that affect the currencies and different pairs, major red news, but the levels are respected regardless of the calendar. It's whether or not, as traders, we can put ourselves into a low-risk, high-opportunity environment when those setups present. And just stepping back and being able to identify the high and low of the week, the closing price levels of the week, and then what type of template do we have? We have 3 days of rise, day 1, day 2, day 3. But when we look at our levels, let's take a closer look at these levels on the days themselves. on Monday, we can see the Aussie dollar came down to the low of day, low of week level. When we get to New York, the 9:30 New York Open breaks down through the closing price before reversing. We'll zoom in here. Made a higher high in the first hour, and that is the template for the dump and pump. The dump and pump template, and 20 minutes after the New York Open, so New York Open 5-minute chart takes traders down into the closing price level. Most stop hunts are 25 to 50 pips before reversing and engulfing right at the closing price level for a long trade. Now, we're not talking about how far it went or anything else. We're just talking about levels in this particular situation. Monday's our day one. We close out of balance. Out of balance meaning it closed outside of the daily range. Longs are in the market. We come into our new day. The market respects the closing price level before pumping higher, triggering the high of day, and continuing longer in the Asian session. It is outside of the daily range, the daily high level. We have long traders in the market, breakout traders in the market on day two, Tuesday. The market pumps up even higher before consolidating, and in our U.S. session does not trade significantly off of any level other than the high of day. No opportunity for traders in the U.S. session. Traders were in London. They may have looked for a shorting opportunity at the London Open. We had our death candle and then the collapse back down, which struggled to get down to the high of day level. Talking about closing price, though, closing price on this particular day acted as a major level of support. Day one, day two, day three, the market had major red news. Aussie dollar went to the high of the week. Again, closing price level acting as a major level of support. So coming back to what Paul Tudor Jones said, if you were looking at positioning yourself in a first bounce opportunity, the person who has been long at the closing price level at the night before, if they're buying and holding, is currently in the money. It is moving in the direction of the closing price. That market failed and broke down in the London session. We talked about this in yesterday's video. We had trap volume above the high of day before the London market broke down. When it gets to the closing price level in the gap time, just towards the end of the London session, how does price behave? It breaks through that closing price level. So if you were long at that closing price level the previous day or in the day itself, now this trader is underwater. Timings, levels, behavior of price. The market breaks down to the low of week level and the low of day before pumping up and breaking down slowly. Again, this pair may not be an ideal candidate on a lot of days in the U.S. session, but just using the levels as a reference point to understand the importance of those three levels. Now, this is a great example when we have closing price and a daily level close together. They will potentially act as a major level of resistance or support. Now, coming into our Asian session, again, we had major red news, Aussie dollar, 6 p.m. New York time. This market broke down before reversing and trading through that level, low of day and closing price level, now making higher highs, potentially as a major level of support for traders who are looking to go long off that level after the major red news release. 8:30, New York Open dumps down into that level in one push, two push, three pushes into that New York low before continuing in the long direction. Now, not suggesting anything about best trade candidates. If we just go back and look at these charts strictly from a behavior of price level, this is Thursday, day two, heading into our closing range of the week. Wednesday, again, you'll notice Wednesday has broken down midpoint range of the week, and we had a day two that chopped and changed on both sides of closing price. But on the way up, we had day one, day two, day three, taking out the high of the week for a 50 pip collapse. Again, breaking through closing price. Now we have a market that is on the downside heading into our Asian window before reversing in that London window and potentially finding support on top of closing price. And this may give us a first green day on our Aussie dollar. When we come back and look at our 1 hour chart, we have Wednesday, our high of the week, and we have potentially now, market's not closed yet, has another hour. We may have a first green day closing price, and our next target area may either be the previous closing price from Tuesday up high, going back to get shorts from Wednesday's collapse, and we have our high of day level. So we may have price contained between the closing price and the high of day level, and yesterday's closing price acting as a major level of support. We'll watch and wait and see. But again, if we just go back and look at these levels, peak formation low, U.S. session long trade off of closing price day one. Day two, a continuation trade with major red news on day two off the closing price level. And day three, major red news going vertical to the high of the week, day one, day two, day three. Then the collapse at the Europe Open pin hammer engulfment. Again, you'll notice right off the levels, pin hammer for the collapse and crossing through closing price, pushing into the low of day level, but we're inside the high and low of the week. And you'll notice as well, we are testing that closing price level, can become major resistance on the way down. New York Open, 1 hour down, 1 hour back up. Consolidation for the continuation collapse. Again, the death candle, consolidation, collapse at the closing price levels. We traded through the closing price level of the week, taking out the low of the week. This was Friday's closing price, which initially gave us support on the way up, and then the vertical collapse on the way down, closing price. Now look at the DJ30, but I want to talk about something as well just before we do that. I talk about Monday being the opening range, Wednesday the midpoint range of the week, and Friday the closing range of the week. Now, we're going to talk about several traders got hooked on chasing first green day and everything else, and we have looked at those templates. We'll do it again in a moment of what a first green day, first red day should look like. Now, if we come back to Friday's closing range, this only has closing price on it for each day and the obviously into a new week, but the high of Friday and the low of Friday in this particular case formed our last and lowest point of the week heading into our new week. Monday broke out of that before reversing on Monday in the New York session. I'll just draw this across. And traders were looking for a free first green day trade. Several traders missed the reversal on day three. The pump, 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 dump, and the other two pairs specifically, they really broke down quite nicely after pump up on day one, day two. But coming back to Friday being the closing range of the week, you'll notice Monday puts in our opening range high, and we're trading inside of Friday's range still. And traders were looking for that first green day, and we're pumping into the high. The closing price and the high of the week are very close together. That's our ceiling. Closing price is support on day two. So we trade around the closing price of the week, which tells you right there that potentially, if we just do a little, we'll put it on the low and we'll make the closing range of the week 50% to give traders a little bit of an idea, in this particular case, how closing price was 50% of the week. We had a close low on Monday, a close high on Tuesday. There's our box. And if we just tighten it up to our closing price levels and nothing else, Monday's close and Tuesday's close, you'll notice again we're below the 50% level on day four, and we'll look at that in a moment. So we broke outside of that range of the consolidation of closing prices where the bulk of that volume is trapped. So all we've done here is put our consolidation on Monday's closing price, Tuesday's closing price. We have a low closing price and a high closing price, and then everything else inside it broke down below 50% in the U.S. session off the high of the day, the high of the week. In our New York Open, they pumped it back up before collapsing and breaking down, and broke down through the low of the week in Asia and London today. But we'll just go and look at price now and our consolidation levels in our New York window. So prior to the New York Open, we broke down lower, and when we break down lower, we redraw our levels. We had major red news at 8:30 a.m. New York time, which was the pin explosion. And whenever there's a pin hammer, that's the level that I'll draw as a potential first area for a trade to go to. That's where the pump starts. And they pump it up, and this is the New York Open itself. We get a pump into the closing price level, the engulfment of the high bull. I always draw the underneath the body. Now, traders may have shorted this first mouse. This engulfment happened at the end of the hour. So we have our New York Open. That hour closes, breaks down in 3 pushes before pumping up again into that engulfment and engulfing one more time underneath the double high bull and collapsing down through the low of the day. Now we're on day 4, Thursday, which is day 2 heading into the end of the week. We've broken down lower. It breaks out and pumps up before collapsing and continuing back into the short direction. Now, I just want to emphasize again the importance of the levels. We redraw our level on a broken out market. That is our low of the day. We had major red news. And then we pump it up into closing price before breaking down. This is our break-in structure or our death candle on a longer time frame. Again, this is a 5-minute chart. So when we get this break-in structure, this is the death candle. They pump it back up inside before collapsing. And this red line is the bottom of our original consolidation that they broke out of on day 3 for the collapse, 1-bar stop down through the low of the day, the low of the week. Now we're looking at the NASDAQ 100. And on Monday we break down having a lower low on the inside. So we can come back to Friday's closing range. Friday is the closing range of the week, and it is the lowest point of the week. If it was Thursday being the high and Friday inside or whatever, that closing range is still what's important. So we have a day 1, day 2, day 3, and you'll notice again major support on day 1, the pump, not even looking at daily high lows, just the high and low of the week. Day 2, support again on closing price levels. And day 3, all of a sudden we break underneath, and you'll notice prior to the US window, we break down through the closing price and make a lower low on the inside. 1 push, 2 push, and then an engulfment death candle first hour that closes at the closing price level. We talked about this yesterday for the collapse 9:30 New York time, breaking down through the low of the week. Lower low on the inside, 1, 2, and 3 pushes for the collapse. Now you'll notice again that closing price, we had a gap on the open. Closing price traded up to that level, which triggered our high of day shorts from the early part of the Asian window. We'll look at a smaller time frame on this, but I want to emphasize support, support, support. Maybe 3 days in a row, 3 higher closes. We'll look at some examples of that. We can look at the previous week. We form our box, our low of the week Friday box, and our Monday high of the week box, 50% before breaking down, and then a big move on free cash Thursday and a parabolic move on Friday in line with our original breakout. So closing price in this instance formed a box, a consolidation, a lower low that pumped for breaking down, going parabolic on Thursday and parabolic on Friday. If we look at our smaller time frame, again, this is a 5-minute chart, and you'll notice too we're making lower lows as the day progresses before pumping up on major red news. As I have said, traders get chopped up on the 1-minute chart and they're trading on the inside, and then they miss the larger move. And I consider all of this fugazi until New York opens. Where are we in relation to the levels? High of day, low of day, closing price. And how does price behave when it gets there? When it gets there, then I will go to a 1-minute chart. Now we can redraw our level from where the pump started on the news, major red news pump. How does price behave when it gets to the New York Open at the levels? It trades up into closing price before giving us a death candle. Now this is right at the open. Now this is where the importance of telling time. Some traders get offended when I say if you can count to 3 and tell time, you can make a lot of money. But if you learn to sit on your hands and watch how price behaves, remember there are 2 types of trades: pump and dumps or dump and pumps. We get this collapse down. Traders are already in their first mouse, and they go to break even. It comes back and stops them out. This little 2-bar consolidation after it pops back up is the beginning of the new 15-minute candle. So we have our break-in structure. We have our death candle on a longer time frame. This vertical move down forms a big engulfment, 15-minute, 5-minute. And we've gone up to closing price. Our thesis is we have traders now that have chased the news in the Fugazi. We have ramped volume, which you've heard me say when it goes ramped. If this market breaks through this level, who's trapped? Everybody. Everybody's trapped above this price. You'll notice that's the last lowest closing price. They've already got this guy. Basically, once they clear that level, everybody's underwater. This news candle now has everybody trading up higher. Closing price and the high of day level is our ceiling. We have our death candle engulfment. This is a 15-minute pullback. First 15 minutes of the New York Open. The next 15-minute candle starts. We have our trade for the collapse back down through the low of the news session and the lower swing low. And eventually it trickles down almost to the low of the week. Doesn't quite get there, but this two-sided auction is building up for an explosive reversal, which we got just prior to when the new hour started. And as I mentioned, this is a measured move of this rectangle on the right side. So this is our break-in structure. And then 40 minutes into the second hour, the third hour of New York, but the second hour after New York opens, for the vertical stop hunt back up into traders that were short on the longer time frame. That market continued to break down and go lower and did a full range expansion of Monday's opening range breakout, which I showed on the community page. Body to body, Monday's opening range. That market has now completed a full range expansion and consolidating at the low of that range expansion. So you'll notice I don't have a lot of junk all over my charts and everything else. I'm looking at the levels and I'm looking specifically at the timing and then what type of setup do I have? I don't try to trade a market every single day. Is it a pump and a dump? What is our overall thesis? What's the day count? Where are we at in the week? So tomorrow is Friday, Free Cash Friday. We may see nothing. We may see a narrow range day. We may see a market that makes a higher high on the inside and coils for a parabolic reversal, possibly into the breakout from day 3. No idea, don't care. When we get there, we will see how the charts have set up. We may get nothing on the indexes. There may be something on the euro, or there may be something on the euro CAD, or the Canadian dollar, or gold. And we'll look at those in a second. Now, Canadian dollar, this is a 1-hour chart. We have the high of the previous week. And I just want to point something out, the importance of hindsight. The importance of hindsight is what allows you to identify a 3-day parabolic opportunity. We have day 1 shorts in the market on Friday, day 2 shorts on Monday, and day 3 shorts on Tuesday. Our initial balance, Monday, Tuesday, opening range initial balance forms one of the extremes potentially for the week. Day 3 shorts. An engulfment reversal prior to our New York window. This market gave a great parabolic trade on Tuesday, day 1. New York open, higher high, dump, and pump engulfment for the continuation back through the high of the day. I want to talk about today's situation up here because we have markets that are on day 1, day 2, day 3, and traders want to short this because it's day 3 from the low of the week. And this is why I keep emphasizing to traders, just because something is up high or down low does not mean that you just automatically try to sell it or buy it. We're looking at the levels and the behavior of price. But I also want to point out something, that if we take this geometrical rectangle, we've done one measured move. This market has yet to break down on the inside or break in structure. We are still making higher highs. So there is no evidence of trying to short this just because we have 3 days of breakout. Now you'll also notice we have day 1, day 2, and day 3. We may see something tomorrow on Free Cash Friday. This is Thursday, and I want to just emphasize that if you're looking to buy up high on day 3, how the market was quite choppy and messy and no real clear-cut opportunities existed in this pair, although we went down prior to the in the London session in the gap time, put a potentially a low of day in place. The market's dumped into the high of day level before engulfing New York Open, and then a third hour move vertical, but no best trade candidate setup. But the point I'm emphasizing here is that just because something is up high or down low does not mean that we want to try and look for a reversal opportunity. You'll notice traders are shorting this into a market that is making higher highs and higher lows, still on the front side. But you'll notice also closing price. So the low of Monday was our reversal level. Closing price acted as support for the vertical move in the US session, the continuation in Asia London on Wednesday, and support for the continuation in the London gap time on Thursday. Day 1, day 2, day 3. Still front side. We may see an opportunity present as we have volume now potentially building on top of that closing price level. This could be a Friday, Monday opportunity. No idea. But when this breaks down, our next target potentially will be that breakout level from the high of the week and the closing price level from Tuesday, day 2. Now, if we take a look at gold, I put a chart up earlier of the high of the previous week from Friday and the low of the current week. This is our Tuesday, and again, that's what started our day count. Somebody asked me why Tuesday was day 1. Is that because Monday was the first red day? No, that is because Tuesday broke out of the low of the day, and when Wednesday broke the high of Tuesday, that started my day count. Failed breakout, low of the week, day 1, day 2. Today was day 3. We're still front side. Closing price coming up into that area acted as a level of support. So again, levels, not chasing the price and then getting caught. We're looking at specifically at levels at the timing window. Now, initially, the closing price of Friday acted as a potential ceiling until Wednesday when we broke through that and they made higher highs. Day 1, day 2, day 3, higher highs, and they dumped down into those levels. So we made higher highs. We had major red news. I'll just draw this high of day in place. The market was already dropping heading into our US session 12 candle window. If we put our universal EMA on this chart, 5 minutes after the news, we had a pin on both sides, consolidation, and then the collapse for 75 pips after major red news on gold through the closing price level. That market went into consolidation and at the New York Open pumped back up into the closing price level. So I want to just emphasize first hour puts in a low. First hour puts in a low of the hour low of the session. Second hour opens and trades into that low before pumping up into our collapse and breaking down through the low. Lower lows, lower highs. Second hour has now put a high of the session in place. And you'll notice we're down low. And from closing price, we are just outside of 50 pips below the closing price level. So remember what I was saying about, imagine your entry point is last night's closing price. This person now is underwater. So we have a trader who is in the money who now potentially is stressing because they're 75 pips underwater. And if you had any size on that as a retail trader, I'm sure 75 pips would blow their account out. If you're trading very, very small, some traders might just hold on to that. Point being, first hour puts a low in place. New York respects that low, pumps up, makes a lower high before dumping down into the low, pumping back up into closing price, and we get a fourth hour continuation back up to where that market broke down, high of session, and into the high of day level before going sideways into consolidation. So most stop hunts are 25 to 50 pips, but the vertical move after the news gave traders into the New York Open an easy 50 plus pips, but importance of levels, timings, and the behavior of price. So if you didn't take any money off the table, when the new hour starts and they go down into that low and sideways, you want to get very suspicious. If you're holding on to something, maybe be dragging your stop down. This market has dropped 3 levels with you in the trade, locking in the cash and walking away. Point being, we'll go back to our blank chart. New York opens, pumps up into traders that are short, drops back down into the low of the day, engulfs, and begins the move back up. False move session beginning into short, lower level shorts, dumping down into the first mouse before reversing half hour mark into the next hour. So 1 hour up, 2 hours down, engulfment reversal, and you'll notice that is a 3-bar reversal engulfment at the bottom. 1, 2, 3 engulfment for the reversal on the way back up. Timings, levels, the behavior of price. And just on that, repeating the phrase I often use, if they dump it down before a session begins, think pump. Dump and pump, pump and dump. Sit back, be patient, work from the levels. 9:30 a.m. New York time. If you're in before that, just understand the market's not even open yet. When the real money comes into that market, that's when we'll see some large moves. Certain markets obviously are going to move in London, in Asia. Day 1, day 2, day 3, we're going to see different variations, but looking for specific setups, the timings, the levels, the behavior of price. Closing price is critical. Study it, understand it. It's part of the escalator up. It pulls the floor out for the elevator down, and vice versa for the dump and pump templates, day 1, day 2, day 3. Have a great day, traders. Focus on these levels, the timings, and the behavior of price. Wait until the market gets there. Watch how it sets up. Look at the clock. Be patient. Let the market lock in a level for the reversal or for the trend trade. Keep it simple, and may the markets go with you.